Sahil Vachani joins us, Managing Director and CEO of Max Ventures and Max Estates. Let's understand from him how's business going. Noida, Gurgaon, NCR region is where real estate is in a strong uptrend. Sahil, good morning. How are things?
Good morning. Thank you for having me here. All very well. Thank you.
Let's understand the thought behind this change. It is just a change of the name by merging it with a subsidiary. Was there a need to do this?
Yes. So the idea was to be able to directly list Max Estates and take away the holding company structure. If you recall, when we had Max Ventures and Industries, we had the packaging business as a subsidiary. So there was a packaging business and the real estate business. With our exit of the packaging business, complete exit to our erstwhile partners, Topline, we have now become a pure play real estate focused player. And the idea was to directly list the real estate company and therefore remove the holding company structure, so to speak. So Max Estates now directly gets listed. Of course, the name will change to reflect the nature of our business. And as an offering, it's a pure play real estate development company focused on the national capital region.
For existing shareholders of Max Ventures, nothing changes. It's just the name changes technically.
Yes, technically, it's just a merger between the listed company and its operating company. So the name changes and also one layer of corporate structure goes away. So Max Estates now becomes directly listed.
For an existing shareholder, there would be entire process, NCLT approval, which I think you've already got. And then there would be a period when the stock has to compulsory go off the grid. It will be delisted for some time, I'm assuming.
That's correct. It will be delisted for about 30 to 45 days. And I think the record date is 11th of August, if I'm not mistaken. Yes.
Now let's talk about the launches. When I look at the numbers, the NCR, the Gurgaon and the Noida launch, it's just looking fabulous for Max. Our numbers are indicating that the company is on course to make at least 1,500 crores of EBITDA from the Noida project and a similar number from the Gurgaon project in next 3 to 3.5 years, which means we are looking at about 2.5 to 3,000 crores of EBITDA in next 3 to 4 years. Am I conservative? Am I realistic? Am I wrong?
I don't think I'll be able to comment on the forward-looking number statement per se, but I think what we have, what I can share is what we have disclosed is the fact that we have recorded 1,800 crores of sale from our project in Noida. We are going to be expected to launch our Gurgaon project at some point next year. We have close to 2.5 million square feet in Gurgaon. It's going to be an intergenerational campus there. In addition to that, we also have our commercial office portfolio, which is 3 ready assets today, which is Max Towers in Noida, Max Square in Noida, and Max House in Delhi. And we have about 3 million square feet of underdeveloped office space that's happening between Noida and Gurgaon. So as a footprint, we'll have a total footprint of about 8 million square feet. And we are seriously looking at more growth opportunities as well as we go along.
So let's get the maths here. You've launched a project in Greater Noida and you've launched a project in Gurgaon. And you are looking at 1,800 crore of booking you've done in Greater Noida, right?
The project is in Noida, Sector 128 in Noida. Yes, we've done 1,800 crores of booking there.
And what about Gurgaon?
Gurgaon, we are anticipating to launch next year, and the total size is about 2.5 million. And we are yet to decide, how will we phase it out. But closer to the time, we'll be able to share a revenue guidance. But at this stage, it's difficult to give a revenue number. But the size is quite significant. To put it in context, Noida was 1 million square feet, and Gurgaon is close to 2.5 million square feet.
I mean, a similar construction with a similar quality to what it has been sold. I'll do my numbers after that.
Sorry?
No, if in that region, real estate region, a similar construction of a similar quality, what is the ongoing market price?
So current market price in Gurgaon is close to 15 to 16,000 rupees a square foot.
I believe that it will be close to that. I'm putting maths together. I'm not asking for a forward-looking guidance here. I'm putting maths together here. Okay. I can't hear him, or he's not answering.
No, I can. Yeah, please go ahead.
No, okay. Now let's understand the Noida project. 1800 crore is what you've booked. How much profit are you likely to make? How many flats are there? And what kind of revenue recognition policy are you likely to follow?
So we have a total of 201 units. They are mostly 4 bedroom and 4.5 bedroom, so to speak. Um, the the revenue recognition policy that we will follow is basically to record it at the time of completion. So over the next 2 or 3 years, it will take us about 3.5 or 4 years to complete as per the RERA timelines that we have committed. So on completion, we will be able to record 100% of the revenue. There will be some cost that does not does not get recorded at that time, but gets recorded in in this current fiscal year and in the next year, which is some marketing, brokerage, which we are not able to match basis accounting policy to the revenues at that time. So it's about 1,800 crores of revenue, and to put it in context, we paid about 350 crores for the land.
Sahil, we've talked about your residential portfolio at greater detail, but what about the commercial portfolio? Do you have a slew of launches lined up there as well, or you're going a bit slow given the fact that you're focusing on residential right now?
No, commercial has been our actually our core strength as well, and we don't sell the commercial portfolio. We build to lease it. So we are 100% occupied across Max Towers, Max House, which are at about 25 to 30% premium to the micro market. And we've just launched Max Square that's coming into the market today to start leasing, and we are seeing good traction for that as well. In addition to that, we already have about 3 million square feet of office space, or 1.5 million in Noida that we are starting to build now, and 1.6 million in Golf Course Extension Road in Gurgaon that is started development. So we will have a very strong commercial portfolio spread across Delhi, Noida, Gurgaon, and across the various micro markets, in addition to the residential pipeline as well.
So you talked about the occupancy levels being higher, plus the launch pipeline in terms of the commercial business as well. But in terms of the realizations and rentals, how's that moving in terms of a year-on-year move? What kind of uptick are you seeing there?
We are seeing actually very high levels of occupancy. We are 100% occupied, and not only that, but the work back from office trend we are seeing is very strong. People are coming back into the office, so we are seeing almost higher than pre-COVID levels of occupancy and tenant footfalls into the building. So the idea is that we are looking to scale this portfolio. The aspiration is to build grade A plus quality developments focused on amenities, an ecosystem, a lot of innovative spaces that give a reason for companies to come back to the office. And we are very bullish about the traction that we are seeing on the office space as well in the long term.
So broadly for FY24, what would be the commercial space which would have been leased out, locked, and where rental would have started, and how will that trajectory move, let's say, for next 2 years?
So we have close to 500,000 square feet that is 100% leased as we speak. We have another 600,000 square feet that's in the market for leasing as we speak, and there will be another 2.5 million square feet that will get added over the next 3 years. With the 500,000 square feet broadly that we have leased, we have approximately 100 crore top line of rental income. The aspiration is to be able to have a fully blended portfolio of rental income of close to 500 crores on a full blown out basis in the next 4 to 5 years.
And before we wrap, I'm going to ask you something which is a women's market curiosity. And we know that there are some, companies of the Max Group where the promoters are looking at reducing their stake, they are looking at reducing their leverage. What is the status on that? Because we keep on revisiting that every time I speak to some, common friends, some shareholders, they said that, look, we need clarity on that front.
I'm not going to be able to comment on that, but I can share that in the public domain, the sponsors have committed to be able to reducing the pledge across their main company, which is Max Financial Services. The other companies, which is Max Estates and Max India, are not. There's zero pledge in those entities. So at this stage, I can comment that there has been a commitment that the promoters have made, and they will definitely honor that.
Venture, I'm just reaffirming it again. There is no promoter pledge, and there are no cross holdings which need to be cleaned out.
Not in Max Estates or in Max India. That's just in Max Financial Services, which also, as I said, the promoter group has clarified that it will get, deleveraged and cleaned up very soon.
Question: what is Sahil Vachani's vision for Max Ventures then? I mean, where do you think the company should be in 3-5 years? Where do you want to take this company to?
I think that we are very clear. We want to be the preferred, top few preferred brands in the national capital region in real estate. I think the opportunity is there. The space is there for us. We have built a track record. We have got a strong balance sheet. We've built the team, and we have the pipeline and opportunities. So I'm very hopeful and confident that we will be able to see Max Estates in the next few years as a top few real estate developers in the national capital region across the residential and commercial asset classes.
Okay, so with that vision, we'll let you go. Thank you so much, Sahil, for making time and speaking with ET Now. So, talking about how looking at being one of the largest and the most critical player in the NCR region and has a big pipeline lined up, both in terms of residential as well as commercial launches.